$60 billion. Gone. Not in a recession, not in a stock market crash. In 5 days. This is the story of Terra and Luna, crypto's most spectacular implosion, and how one man's unbreakable math experiment turned into the greatest financial bonfire the blockchain has ever seen. But before we get to the inferno, let's talk about the match that lit it. Terra was created in 2018 by Terraform Labs, co-founded by Do Kwon and Daniel Shin. The pitch? Brilliant. UST, Terra USD, would maintain a value of exactly $1, backed not by real cash in a bank, but by its sister token, Luna. No vaults, no auditors, just math and vibes. The core was a dynamic equilibrium. 1 UST would always equal $1 worth of Luna, and the two could be freely exchanged, with smart contracts controlling supply to maintain the peg. When UST drifted below $1, arbitrage traders could buy cheap UST and swap it for $1 worth of Luna, free money, which pulled UST back up. Elegant in theory, catastrophic in practice. Now here's where it gets spicy. Because a dollar-pegged coin earning 0% interest? Nobody's getting rich off that. Enter Anchor Protocol. Anchor Protocol was Terra's flagship DeFi application, offering a fixed 20% annual yield on UST deposits. This extraordinarily high yield was subsidized by the Luna Foundation Guard and was not organically generated by the protocol's lending activities, yet it attracted over $14 billion in deposits. 20%. Guaranteed. In crypto. Many analysts voiced concerns about the sustainability of this rate, with some even labeling it a Ponzi scheme due to the unclear source of these high returns. But the lunatics, that's literally what they called themselves, weren't listening. From trading below $1 in early 2021, Luna soared to approximately $106 by April 2022, creating a wave of crypto millionaires and elevating Do Kwon to a cult-like status. So everything's perfect, right? Wrong. Because what goes up on pure faith can come down at the speed of panic. The first signs of the run appeared on May 7, 2022, when two large addresses withdrew $375 million UST from Anchor. The value of Terra USD dropped from its $1 peg to 0.985 Oz. News of the sell-off spread quickly among the crypto community and started a panic. Investors ran to withdraw their UST from Anchor and swap their Luna and UST for other coins. As UST fell below $1, massive Luna creation flooded the market, crashing Luna's price. As Luna crashed, confidence in the mechanism collapsed further, accelerating UST selling, creating more Luna, crashing Luna harder, a feedback loop that could send both tokens to zero. And that's exactly what happened. The death spiral had begun. Luna's price, which had peaked above 116s in April, began plummeting. By May 9th, it had fallen below $30. By May 11th, it was under $1. By May 13th, Luna was trading for fractions of a cent, essentially worthless. Hundreds of thousands of investors were affected, including some individuals who had put their life savings into the Luna coin. Do Kwon, meanwhile, tweeted, "Steady lads," as if reassuring passengers on the Titanic that the pool was just a little full. What about the emergency reserves? As of May 7th, just before UST broke its peg, the Luna Foundation Guard held 394 Bitcoin worth approximately $2.4 billion. Even the deployment of that emergency Bitcoin reserve, meant to halt the collapse, failed to restore UST's peg or stop the spiral. The money evaporated. The peg died. And the ecosystem that was supposed to be the future of decentralized money became a cautionary tale taught in finance classes. The aftermath was brutal, and it's still unfolding. Celsius Network, a crypto lending platform heavily exposed to Terra, froze withdrawals and later filed for bankruptcy. Three Arrows Capital, a prominent crypto hedge fund with large Terra positions, collapsed. Terra's collapse accelerated regulatory scrutiny of stablecoins and algorithmic cryptocurrencies, with policymakers worldwide demanding stricter oversight. In the United States, bipartisan legislation to regulate stablecoins gained momentum following Terra's failure. And Do Kwon? On March 23, 2023, he was arrested in Montenegro while attempting to travel to Dubai using falsified documents. He was charged with 8 counts, including securities fraud, commodities fraud, wire fraud, and conspiracy. He was extradited to the United States, where he pleaded guilty to 2 counts of fraud and was sentenced to 15 years in prison in December 2025. $60 billion, hundreds of thousands of lives, and one man who called his critics poor. The Terra Luna collapse isn't just a crypto story. It's a masterclass in what happens when confidence becomes the only collateral. If this video just saved you from the next unbreakable 20% yield promise on the internet, smash that like button, subscribe, and share this with anyone who still thinks math alone can beat human panic. Because in crypto, it never does.